Investing a relatively small amount of money into high quality dividend growth stocks and ETFs over a long time frame can add up and compound to quite a large portfolio. And I even have evidence to prove that, because that's what I've been doing partially in this long-term portfolio for around 6 or 7 years now. And after years and years of investing in some positions making a lot of money, and of course some positions losing money, this portfolio is currently valued at around $491,000. But in this video, I'm going to show you the exact math and step-by-step results of what a dividend growth investor could potentially expect after just investing $50 per week into a high quality dividend growth ETF like the SCHD ETF. Now, if this interests you at all, make sure to please drop a like down below, subscribe, and let's get into it. So first things first, if you are a long-term dividend growth investor like myself, and you want to find an investment vehicle that matches exactly what you're looking for and what your strategy is, by all means find the right stock or ETF to do the job. But for me personally, as of right now at least, I'm devoting a decent amount of cash balance on a daily basis to buy into the Schwab US Dividend Equity ETF, and these are the following reasons. The SCHD ETF has a good high quality basket of stocks that it tracks. On top of that, the ETF is very cheap to hold on to. It's just around 0.06%. The SCHD ETF also has massive growth potential, considering the ETF is up around 174% on the max time frame. But maybe most importantly, to me at least, for me specifically, I'm really searching out dividend paying stocks and ETFs that have a decent starting dividend yield, for SCHD specifically around 3.7% or so, and more importantly, have a nice healthy history of dividend growth. Now, the reason dividend yield and dividend growth is so important to me is because even if I don't have all that much cash balance on a daily basis to invest into something like SCHD ETF, with the current dividend yield and dividend growth rate, I'm most likely going to get paid more and more over time just by holding onto this ETF. At least that's what it's done historically. So now we get into the fun part, the dividend calculator. And keep in mind, you can use whatever stock or ETF you want to use as your investment vehicle to get you to point A to point B. And of course, the cool thing is with the stock market, there's so many different investment vehicles, and there's truly something for everyone. If you're more interested in buying into something that has a little bit higher yield as of right now because you favor cash flow, let's say, then of course there's great stocks or ETFs that are going to match your strategy perfectly. On the other hand, if you favor growth a little bit more over income, there's going to be tons of options there also. But for this example, what I'm trying to prove is that a relatively small amount of money, just $50 on a weekly basis, or $2,600 per year, which is $50 times 52 weeks out of the year, $2,600 per year. Invest it into something like SCHD, which has the potential to grow, a nice decent starting dividend yield, and also massive historical dividend growth. We are going to see exactly what the power of compounding can do if an investor is willing to just invest $50 a week into something like this. So now plugging everything into this dividend calculator, distribution frequency is going to be quarterly because that's how frequent the SCHD ETF pays out the dividend. Now keep in mind, some ETFs and stocks pay out on a monthly basis or an annual basis, but quite a few of them pay out quarterly. Now next we have DRIP turned on. Yes, dividend reinvestment is going to be turned on, which means that throughout the years, for this example, we are going to reinvest every single dividend and buy more shares of SCHD regardless of where the ETF price is at that moment. Now, of course, once again, you could always turn DRIP off and use the dividends along the way to maybe help out with bills or whatever else it might be. But keep in mind, reinvesting your dividends is going to help substantially. Now, the starting principal is going to be $2,600, which once again is $50 on a weekly basis for an entire year. And what's great about messing around with these dividend calculators is you could of course turn this to $5,000 starting principal, or let's say $1,000, whatever makes sense for you. With of course stating the obvious that the more you contribute to your stock market portfolio on a yearly basis, probably the faster it's going to grow. Next, we have the initial annual dividend yield for SCHD, which is around 3.8%. And once again, that's going to change depending on what you're buying into. Then we have the expected annual amount of dividend amount increase is around 8%. This could be more, this could be less. The dividend growth for SCHD historically has been anywhere from around, say, 6 to 12%. Then 3% annual share price appreciation and 30 years invested. So this is also going to completely depend on where you're at in your investing journey. Right now, let's say you're around 16 or 18 years old. That's going to be much different on the dividend calculator versus if you're 45 years old. But for most of you watching this video, you probably have a good 30 years ahead of you before you're ready to retire. So now with all that input, let's see what we get. Okay, so you're number one, $50 invested on a weekly basis. Nothing more, nothing less. Will give us around $2,600 of principal when it comes to SCHD for this example, and around $100 per year in dividends. Not all that much to be excited about, because of course the power of compounding takes some time to really get juiced up. Year number two, by reinvesting all the dividends, which is $100.22, and also by contributing an extra $2,600. Now the principal has already jumped to $5,300 and some change, with $216 per year in dividends. So the dividends are already moving up quite a bit, but once again, nothing all that crazy yet. By year number 3, $8,300 in principal and $352 per year in dividends. Year number 4, $11,400 and $510 per year in dividends. Keep in mind, this is just from $50 per week. And of course, the cool thing about dividend investing long term is, let's say later on in life you're going to get a new job or maybe a raise, you can of course contribute more or less depending on where you're at in life. By year number 5, almost $15,000 in principal and almost $700 per year in dividends. Skipping down a little bit, year number 10, $36,000 and almost $2,200 per year in dividends. Now from year number 10 to 20, you are going to see the numbers move up a lot faster because the power of compounding is really taking place. And you also can see this by looking at the yield on cost. The yield on cost is getting much, much higher as time goes on as well. So by year number 15, this investor would have around $70,000 invested from just, again, $50 on a weekly basis and around $5,300 per year in dividends. By year number 20, over $100K now invested, $114,000 and almost $10,600 per year in dividends. Now from year number 20 to 30, the numbers are going to really kick in, and the numbers are going to get bigger much faster. As you can see, the yield on cost goes from 24 to 27 to 31 to 35. Compared to the jumps way back here, the numbers are getting bigger much faster. So by year number 25, this investor would have around $246,000 and around $30,000 per year in dividends. And by year number 30, all the way at the bottom, this investor in theory would have around $506,000 invested from just putting around $50 on a weekly basis into a high quality dividend growth ETF and around $80,000 per year in dividends. Now the crazy thing is that I can truly attest to the snowball effect. The fact that the longer you stay invested and the longer you continue to reinvest all the dividends, your portfolio is going to have the chance to grow faster and faster over time. Now, I've personally only been investing for around 6 or 7 years, but even at this time, I can start to see that the dividends are starting to get much bigger at a quicker rate. And then by buying more shares of more stocks and ETFs across the board, those dividends are coming in a little bit bigger, and then the whole thing just continues to compound until hopefully one day I have a massive snowball of income completely generated from dividends. Now, once again, I reiterate that the potential of the long-term portfolio that you're building is going to completely depend on what you buy into. If you're buying into something that has much more growth potential, or maybe higher dividend yields, or maybe you want to add more of a starting principal, lock in some more money earlier, or potentially you want to add more money on a yearly basis over the next 10 to 30 years. This is going to completely change the path of your investing journey, and what's great about investing is you can change it as you go. Even if you start off with a small portfolio today or tomorrow, you can of course always ramp things up in say the next 3 to 5 years and really get that snowball rolling, and of course really generating that dividend income at a quicker pace. But now I want to hear from you guys down below when it comes to building your dividend growth snowball. What stock or ETF do you personally buy on a consistent basis? Like for me, I buy SCHD on a daily basis for the most part. Which stock or ETF do you buy all the time to build your own dividend snowball? Drop the ticker in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.